everybody is talking about this FAANG, and but what is it actually, and what does it stand for? So FAANG is FAANG, and each of the letters actually stand for a company in the tech industry. And as you guys are following me already, you know I love tech, I love stocks, and I love investing. So I will go in depth in each of the stocks so you can know which is the best stock for you, and you will see all the latest numbers in the stock, what is the strengths of the company, what is the weakness and risk of the company. Very interesting. I summarize it for you in a very simple way and some very interesting and easy to understand slides. So not only the pros but also the beginners can have the much value out of this video. So make sure you stay tuned, and let's dive into it. Alright, let's start with F for Facebook, the youngest stock of all the FAANG stocks. They just, got founded by Mark Zuckerberg 2004 at the university, and what happened since then we already know. Let's dive into the strengths of this company. Obviously, it's the biggest player in the social media, and they invented or reinvented the social media. What they really has a strong point, what makes Facebook, only the Facebook platform, so wealthy and a lot of value is that all the people on this platform are there, or most of them are with the real identity. So they put their real name into it. If you consider like Instagram or YouTube, people can just choose random usernames, but Facebook actually is the only one in this scale that, make sure that people can use their real identity. And this is of course very valuable for all the people who can really build their network, who want to build their network, and of course advertisers that have the real names people. Another very big strength point for this company and stocks is Instagram. I believe Instagram is number one growing social media in the world and has still a lot of potential. They still have a lot of options to actually make revenue on advertising. Stories is a very big topic, so there's a lot of potential to make still a lot of money with advertising on Instagram. And another big strength point for me at least is when the founder is still the CEO. You had the same with the Virgin Group. Or a lot of the Virgin companies still have Richard Branson as a CEO, at least the first years. You had the same with Apple and Steve Jobs. You had the same with Microsoft and Bill Gates. You have the same with Tesla and Elon Musk. This is for me a very strong point, and it's still there for Facebook. So I think that's a very big strength. And another one that is huge or can be huge, I go in depth in other videos, for Libra. Libra can be a new currency that is accepted worldwide, and it's launched basically from the guys of Facebook. So very big strengths here. But let's move to the weaknesses to also inform you guys what you have to look for when you're investing in this company, which is they have some or had in the time, they want to improve it. Privacy issues, of course, about a year back, the Cambridge scandal where the stock fall 40%, a great opportunity to invest when you was considering. It was a great option to go inside Facebook stock and pump up some numbers and pump up some portfolio with Facebook stocks. That definitely was a very good option. Another weakness, I believe, is also the Facebook platform. It's like the weakest of all the social media elements of the company, I believe, because maybe I've seen Instagram is growing, WhatsApp, everybody use it, but Facebook seems to be a little bit spammy. people, younger people especially, don't want to be on Facebook and so on, or not using Facebook. If you look into influencers, from all the platforms, Facebook is the one that maybe they don't use that much and so on. So, maybe it's a weakness for the stock. And of course, just recently by the Federal Trade Commission, they are regulatory risks for this company because it's so huge and so much influence on the people's lives that, the US government start to say, what are you doing there? What you're doing with the data of the people, and so on and so forth. So this can be something that is a risk or weakness for the company, because also they just got fined $5 billion to pay to the Federal Tax Commission to solve the Cambridge scandal, to close it off. Let's go into the stock of Facebook. The current market cap as of this recording is $570 billion US dollars. So it's definitely the biggest player in the social media industry, and grow to the biggest the biggest media company, but not producing content. The content is produced by users, which is ridiculous. We're going into these industries where Uber don't have cars, Airbnb don't have hotels, and the biggest media company in the world don't produce content. So very interesting. PE ratio is 34, which is, I would say like medium. It's still okay, a little bit on the higher side, but not like something crazy like we will go into the next stocks. PS ratio of 9, so the stock price is actually divided by 9 would be something what they do in sales. Then a 2009 year-to-date growth of the stock itself is already almost 50%, which I think it's a little bit, overgrown already. That's why I think that's like the medium one. And the margins, the EBITDA margin is 42.7%, and this is really, really good. Of course, they have this kind of software margins here in this industry, in this business. So overall, a medium view from my perspective. Let's go to the next one. The next one is an A, like Amazon. Are you already an Amazonian? But you are already a wolf? If not, subscribe and hit the thumbs up button, smash it, so this video will get up in the YouTube algorithm. I would be very thankful for that. Let's dive into Amazon. Amazon strength, it's obviously the size of this company. They just swallow whatever market they are into. They get huge market shares of, they started with e-commerce. They destroyed anything in e-commerce what is nearly this size. They destroyed, whatever is in web services. They have the biggest cloud and storage service, hosting service in the world with AWS, very much growing as well. And now they are going into the ad business. So after Google and Facebook, this will be interesting, guys. Very, very interesting. What I love and the strengths of this company, they are very customer orientated and also very still growing, I think around 30% per year. And they are reinvesting almost all the profit into the company to further grow. The growing, it never ends. So this is something that, definitely is the strength of Amazon. And also that they are discovering with this investment always new markets. So as I said, they started with e-commerce, grow with this e-commerce. They said like they use so much storage and cloud capacities, they should do it the business by their own. And now there's so many people searching on the Amazon website, so they decided, hey, we can place ad for products and so on. So they are into the ad business now. Another big point is the founder, same like in Facebook, is still the CEO. I love that. I love when the founders with his original vision and still driving with the vision is still on board and the main decision maker beside the shareholders in the company for further growth, And I believe also that AWS at itself is huge strengths of Amazon. Why? I will give you a very single example. There was a couple of months or years ago where suddenly half of the internet websites was not working, and it came out that, one technician of AWS make a mistake in the code, and it made down a huge amount of websites worldwide. So you see how much power this actually is for the internet. They are basically actually the infrastructure of the internet, which would be the streets or other for transportation companies to transport their information to the client. And the AWS is exactly that. And that's why I think it's huge strengths for Amazon. Coming to the weakness, of course, here also they are having a Federal Trade Commission case that they are currently in together with Google and Facebook. So regulatory could be, with its punishments and fees that they have to pay to the government, could be a weakness. And of course, it's harder and harder to grow when you're getting so big. So I think this could be also, we see this in the e-commerce business. The margin goes slower, and at one point you cannot make more money and go always faster, better, and so on. And so I think that could be a weakness. Hopefully not. The same will happen with AWS and also the ad business. So the next foil is actually about the Amazon stock. Of course, we will have a look here. Market cap, as of this recording, 961 billion US dollars. That is one of the biggest companies in the world. And now, shock, but also an explanation for that same here. PE ratio is just to the Mars and back. It's 97, very, very high. Why is that? Because they are having a really, really high valuation, or let's say based on the earnings, and they are trying to keep their earnings, as you remember, very, very low to reinvest in their business. So that's why the PE ratio seems to be very, very high. But if we going into the price sales ratio, it's just 3.87, so it's for this kind of company and business very low. So this company also, Amazon, just grow around a quarter, 26% this year. That's also still very okay. It's around the same that the S&P grow this year, and EBITDA margins is the lowest of all the FAANG stocks. Though it's software, or mostly software, but there's also warehousing and all these things. And this, of course, is not so beautiful like the other. Only 13% on Amazon having as EBITDA margin. So let's go to the next. And it's another A in FAANG. It's Apple. And on this point, I would love to show you something. I don't get paid for that, but whoever read business books, I want to recommend one book because it's so good, and it's about this FAANG stocks, and it describes what they do in core business, why they are so fast growing, what is the behind this, what is their strengths, and so on. So it's called D4 by Scott Galloway. And it's about Facebook, Google, Amazon, and Apple, and describes all these things that I mentioned. Very good book. Have a look and read it. Apple's strength is they're just extremely premium and extremely sexy. So also in the book, for example, they speak about that they don't sell hardware or software, they sell sex appeal. If you feeling good when you have this iPhone, you feel better than different, they sell you this feeling that you feel better than different than people. And, with its brilliant marketing, its unbelievable strong branding. And that's why people like Warren Buffett, who invest in branding companies or like strong brand companies like Coca-Cola, are now investing also in Apple. And they are, for my personal view, the most innovative company in the world, not only by their hardware developments, but think about it. They started as a computer company. Then they changed the whole company, and the most of the revenue came from the music department, iTunes and iPods. So they were basically a music company. Then they changed and turned this billion-dollar company around and make it phone company out of it, because the most revenue still comes from phone. And now they are making a very, very important change to the service and software basically that they're selling, you know, with Apple Cloud, with Apple Credit Card, with Apple Music, you know, Apple TV Plus is coming as a streaming service. So once you bought this device, then, you know, it's not only working so good with each other, with all your other Apple devices, because it's so good and premium and you feel like sexy when you have this product, but also it's you paying monthly for all the additional service, which is of course the bigger chunk of the revenue in the future. And this is what they're having extremely good growth rates, and that's why I think that's a big point as innovative company. They're having one of the highest margins in the industry for such a company. Obviously they come with great marketing, you know, their headquarter looks like a landed UFO, you know, all these things. If you are, this comes to the point of the sexy and premium products. And last trends, I already dived into it a bit. The Apple services upcoming very, very strong, and could change that it's not only dependent on the iPhone sales, but also, or most of it, through the services. Weaknesses of this company, obviously trade war, because they are producing the iPhone in China currently, and when there will be something that will break this or put a lot of tariffs on these phones, then, you know, it will be hard for Apple. And second, that they need to have this change now. And of course, from phone company to service company, this is a big change, and they have to make it. Otherwise, you know, the revenue of iPhone is dropping. It can be a problem for Apple if they don't figure out how to sell and make the revenue of services the best revenue stream for their company ever. So let's dive into the stock. Wow guys, as of this recording, 955 billion US dollars, one of the biggest companies here on earth, and their stock looks as sexy as the product. So let me dive into it. So PE ratio 17, guys, 17. This is one of the lowest that I have seen in tech and in this FAANG companies. Really, really good. PS ratio also AS 3.89, below 4, is similar to Amazon. Also they pay dividend, which is also important, but let's see the growth year to date, only 30%, so not overgrown. This year already, with, you know, the hype in the beginning in the stock market, this year was crazy. And EBITDA margin 30% on all the things they are doing. It's amazing value. So, you know, very, very interesting stock. With these numbers, very, very stable. They have a lot of cash. They have a very strong balance sheets as well. So definitely something that you should look into if you're interested in the FAANG stocks. Let's move on. The next one is an N like Netflix. And chill. Netflix is another FAANG stock, and their strength is so obvious. I don't even know if I need to go so in deep on that. Obviously they are the biggest streaming service on earth. They have really great content. They're spending billions of dollars in content. So they have really, really successful series like House of Cards, Stranger Things, Casa del Papel, all these things that we watch like on daily basis and keep us watching on the platform. So really, really strong, great content growth. And I think what keeps Netflix on the top of the streaming services will be that they are internationally. I think there's only 2-3 countries in the world where they are not available for streaming. This is huge, guys. If even the new companies that coming into the streaming service like Disney or Apple, they are starting just with US and all these European countries. But Netflix, you can watch everywhere in the world. That's a very, very strong point. Though the weakness of the business for sure is that they're having huge content costs. So if their direction of the content will be not so good, they are definitely going to fall into stock price, and also the upcoming competition through Apple and Disney and so on, it's coming. So we have to see how this will develop. They are way not spending so much money like Netflix doing every year and increasing every year, but it's definitely a weakness point where, you know, the competition is growing and the only very strong market position can be revised through this competition. Netflix stocks and market cap, the smallest one from all FAANG stocks, 147 billion US dollar market cap, but a PE ratio, and now hold your seat, 131 PE ratio. That's the highest one of all. The PS ratio of almost 9 is also very high, and year to growth of the stocks is just 25%, which is okay. And the margins that they doing on their product, because it's basically they just having produced the content, marketing costs, server costs, and so on, but you can watch it via app or via smart TV or via iPad. So the margins is very, very huge with 58.5%. Let's move to our last one, which is G, like Google. All right, before we going into the last one, make sure you subscribe if you haven't done yet, and thumbs up for this video if you like it. Another tip, if you are watching this video to educate yourself, make sure you watch this on the way to work. You know, you can listen to it, you don't have to see it all the time. So like a podcast, use it like a podcast, use it to improve yourself. It's all about you. The content is for you guys, so enjoy, and you will learn a lot for the stocks and the stock market, stock investing, and so on and so forth. So make sure you do and listen whenever you can, whenever have a spare minute, make sure to tune in. And now we are diving into the Google. Actually, their stock is named Alphabet because they made some restructuring where, you know, Alphabet is the parent company, and under it the Google services, and so on and so forth. The strengths obviously is their ad business. I mean, everybody use Google like every day, a couple of times. And every time we look for it, something, we see advertising that they sell to advertisers and companies. So we click on, they charge them. And this is huge, guys. It's still making like 85% of their billions of revenues. Another strength, they have the biggest video platform in the world, YouTube. And one important fact, after Google, YouTube is the most used search engine in the world. So the people are using Google to search for things, but also they use YouTube to search for things. You can, you know, watch every tutorial on earth on YouTube, and that's very strong. And they are still growing around 30% as per their last Q2 earnings. Another big point, they are having the biggest and most advanced and spread out, sorry, not advanced, because I don't know, this is like subjective to the Apple OS, which I very like as well, but they have the most spread mobile OS in the world, which is Android, belongs to Google, so much of power over there. We have seen the recent, you know, power that they had, that US government said nobody can deal with Huawei anymore from US companies. And then, you know, Huawei was basically there with the mobile phones without any operation system, which, you know, went away. But you see how strong Google is there, and, you know, take off the software of something and you can throw it away. And another strength of Google, I think, is that they investing also a lot into a new revenue stream or potential revenue streams for the future, like artificial intelligence. They are one of the market leaders, and other bets, you know, like self-driving cars and so on. It's always good to see what's next around the corner, because ad business is, there's other competitors like Amazon, Facebook coming, want to have the piece of the pie. So let's move to the weakness, upcoming competition in their main business. So we need to see in the next couple of months and in years how this will evolve. And obviously through their regulations. Also, they have this upcoming case with the Federal Trade Commission for the ad business. So let's move over to the stock. Market cap of this, by this recording, is 863 billion US dollars. That's huge, one of the biggest companies in the world, obviously. PE ratio, it's in the, medium size range with almost 30. PS ratio also a little bit on the higher side with 6. This year growth, and there's already the latest growth of 9% after the Q2 earnings included already, is just 18%. So if we just think that they will grow at least 30% this year, there's still 12% potential growth. So very interesting for this kind of company. And last but not least, the EBITDA margin is 25. Obviously, their ad business is very profitable, but the others one require a lot of capital investment, and all this brings the EBITDA margin down to 25, which is okay. I mean, for this size, it's okay. And so let me know what you guys think. That was it. I hope you have for sure, if you didn't know, now you know what is FAANG, what is important to know about these companies. It's very interesting because they are basically the companies that was a couple of years ago for the oil companies and so on. These are the companies that rule not our daily life, but rule the world. Very, very big market caps in these companies. So enjoy the videos here on this channel and make sure to come back, and don't forget the grass is greener on the other side.